Assalamualaikum warahmatullahi wabarakatuh. I bid to Madam Unku Munira. We are from Group AC220MD7 are going to present the functions and benefits of insurance. We will be presenting for the introduction, how does the insurance works, functions, and the benefits of insurance. So before we start, let me introduce our team members. We have Azlin binti Zakaria, Fatin Nurdini, Nur Batisha, Nur Hafiza, and lastly, my name is Nurul Ain Yus binti Swati. Let's move on to our introduction part. What does it mean by insurance? Insurance can be defined as a contract in the form of financial protection policy. It protects an individual's finance in the event of unforeseen events. The policyholder is the insurer, whereas the insurance providing company or insurance carrier is the insurer. In many circumstances, insurers provide financial coverage or payment to the policyholders. The policyholder pays an amount to the insurance company known as premium in exchange for insurance coverage. The insurer promises to cover the policyholder's losses, but only under specific conditions. The amount of premium paid determines the amount of insurance coverage or policy limit. There are three components of insurance policy, which are premium, policy limit, and deductible. Premium means the cost of an insurance, which is usually expressed as a monthly cost. It is calculated by the insurer based on the risk profile of you or your business, which may include creditworthiness. While for the policy limit, it can be defined as the maximum amount an insurer will pay under a policy for a covered loss. It may be set for a certain time period according to the policy term for a specific loss or injury, or for the whole policy term. Lastly, the deductible is a specific amount the policyholder must pay out of their pocket before the insurer pays a claim. Let's go further on how does insurance works. Insurance works by pooling the resources of a large number of people who face similar risks in order to protect the few people who suffer losses. When you get an insurance policy and pay an insurance premium, you are contributing some of your own funds to the pool. For example, if your property is lost, stolen, damaged, or destroyed by an accident, and you have a general insurance policy that covers those risks, you can file a claim and use the funds to help pay for repairs or replacements. Proceed to our next presenter.
Function of insurance. There are three types of function of insurance: primary functions, secondary functions, and indirect functions. Assalamualaikum warahmatullahi wabarakatuh. My name is Fatin Nurdini binti Muhammad Fuliman, and I will be explaining about the primary function of insurance. Insurance primary function is to act as a risk transfer mechanism. Individuals, businesses, governments, and organizations can use insurance to transfer the financial consequences of risk to insurers in exchange for a premium. This provides individuals with safety, protection, and safeguards them against future hazard, accident, and vulnerabilities. No insurance can prevent danger from occurring or future events from occurring. However, it can certainly assist you by providing some coverage for the misfortune of the danger. Without insurance, these individuals or organizations must bear the risk. Insurance is a good way to share financial losses. It is a collaborative effort in which the risk is distributed among a group of people. As a result, no one is required to bear the losses caused by uncertainty. In particular, they will face the uncertainty as to when a peril will occur, and if it occurs, how much it will cost. Through insurance, they are able to substitute a known cost for an unknown event involving an unknown cost. Insurance is a tool that aids in the transition from uncertainty to certainty. As individuals obtain coverage from the insurer, they are secure by their ability to meet future losses with a coverage and withstand future threats. In any case, when we get security, it turns our vulnerability into assurance that we can deal with the future threats.
Assalamualaikum, I am Nur Hafiza binti Harun and I will continue presenting on the secondary functions of insurance. The first secondary function is insurance releases funds otherwise tied up in reserves. Businesses and individuals can avoid the need to freeze funds by purchasing the insurance to give financial security in the event of a loss. The fund would be accessible for investment whenever it was released. Next, the second one is insurance reduces losses. Insurers help to reduce losses both in frequency and severity through their actions and recommendations in rating, survey, inspection, and salvage activities. The third secondary function is insurance also reduces fear and worry. Individuals and businesses can get peace of mind by purchasing the insurance. The insured gains peace of mind by removing the fear and worry associated with such losses. Next, the fourth secondary function of insurance is it stimulates business enterprise. The risk transfer mechanism provided by insurance has enabled and assisted the operation of present-day large-scale industrial and commercial organizations. Such large-scale enterprises could not have started without transferring many of their risks to the insurance companies. Insurance also stimulates business in other ways such as it facilitates financing of property by banks and other financial institutions. Besides, it also facilitates overseas trade. Next, the fifth secondary function of insurance is that insurance encourages saving. In addition to protection, insurance provides a guaranteed cash value at maturity or death in exchange for premium payments. And the last secondary function of insurance is that insurance offers social benefits. Insurance benefits society indirectly by lowering the cost of social services through compensation paid by insurers to the insured. For example, the workers of a factory that was destroyed by fire might face unemployment if the factory was not insured. I think that's all from me. I will pass to the next presenter. Thank you.
Hello again, I am Fatin Nordini binti Muhammad Furiman, and I will be explaining the last type of function, which is indirect function. There are three indirect functions. The first one is an investment of funds. Insurance can act as a protection while also act as an investment. Insurers accumulate large funds which they hold as custodians, out of which claims are met. These funds are typically invested for the purpose of earning interest or income in the public and private sectors. People can use insurance to invest instead of using other means of investment that have much higher risk. The insured can manage his or her own fund by allocating the fund on any kind of investment that he or she wants. Next indirect function is invisible reward, also known as a service whereby no tangible good is being exchanged. Insurance can be marketed as a necessary service that provides protection and peace of mind to the insured party. This type of service is improving day by day to provide more benefit to the people while making a profit, thereby positively affecting the economy. Insurance can contribute considerably to a country's balance of payments as an invisible export. For example, while Britain is a net exporter of insurance, Malaysia is a net importer of insurance. Last but not least, the last type of indirect function is sources of employment. The insurance industry in Malaysia has generated numerous employment opportunities through creation of jobs such as underwriter, claim officer, loss adjuster, brokers, agents, and financial advisor. As a new job emerge, it provides opportunities to people in terms of employment. Same goes to the insurance, in which it provides benefit of income to society. Some people who works in the insurance company can market their product in many ways, such as using social media and using less traditional way of promoting it through direct selling in this new norm. That's all for the function of insurance. I will pass to the next speakers to talk more about the benefit of insurance.
Assalamualaikum and hi, I would like to wish the madam. My name is Azlin binti Zakaria and today I'll be presenting on the benefits of insurance. First benefit is peace of mind. The existence of insurance provides peace of mind to the insured as insurance actually exists to meet the financial consequences of certain risks. It is important for private individuals when they insure their car, house, and other belongings, and it is also important for industry as well as commerce. When entrepreneurs purchase insurance, it allows them to transfer a little bit of risk of being in business to an insurer. Insurance also serves as a stimulus for existing firms to expand their operations. This is done by releasing funds for investment in the productive side of business, which would otherwise have to be kept in easily accessible reserves in case of future loss. Reserves for emergencies such as fires, theft, or serious injuries can certainly be created by medium-sized and large firms. But this money has to be accessible rather fast, and hence the rate of interest company could obtain would be much lesser than the normal rate. Due to the impact of common pool, business will be able to obtain insurance at premium, which is less than the fund that the company would have to retain, even as assuming it could retain anything in the first place. Premium can be considered as certain loss to business. However, firm is free to proceed its operation and invest knowing that certain risks are now covered. Now, moving on to the second benefit, which is social benefits. When business owner has funds available to recover from loss, it also implies that jobs are unlikely to be lost and goods or services can still be sold. The social benefit is that people get to keep their jobs, maintain their sources of income, as well as keep contributing to the national economy. In a lesser degree, a large loss that results in business closure might have the same impact on the community. It may not be as visible as large factory closure, but when losses are added up across the country, the effect is significant. Although it is not believed that insurance alone keeps individuals employed, it does play an important role in preventing unnecessary economic suffering. The third benefit will be investment of funds. Insurance companies have large sum of money at their disposal. This is due to the fact that there is a time gap between receipt of premium and also payment of claim. A premium may be paid in January, but no claim may be filed until December if it occurs at all. The money is in the hands of the insurer who can invest it. An insurer will have the accumulated premiums of all insured over a long period of time. One of the advantages is that the money can be used in the economy because both government and also industry have access to a huge pool of working capital. This money is the result of thousands of individuals and companies paying premiums, and in some ways, the existence of insurance market effectively forces people to save. For instance, if we consider a person who insures his home, he may not have enough free money to invest in stocks, acquire real estate, or even lend money. When that individual's premium is combined with the premiums of thousands of other people, a respectable quantity of investment money becomes accessible. Now, I'll pass the floor to Noble Trisha to continue presenting on the benefits of insurance. Thank you.
Thank you, Azlin. Hi, I am Batrisha, and now I will continue to the fourth benefits of insurance, which is loss control. Loss control is a set of risk management procedures focused on reducing the possibility of insurance claim being filed. Loss control entails recognizing the sources of risk and implementing either voluntary or mandatory risk reduction steps by a client or policyholder. In this case, insurers will identify behaviors that lead to a policyholder filing a claim and work to minimize the likelihood of these activities occurring so they don't have to pay out claims and lose money. Besides, insurers may provide policyholders incentives to be risk-averse. For example, an automotive insurance provider may lower a policy's rate if the driver completes a driver's education course. This is because there will be a low risk for the train driver to get into an accident and have a low likelihood for the driver to file a claim against the insurance company after completing the course. Hence, lower premium could be offered. This program is beneficial as both policyholders and insurers, as policyholders may benefit from a cheaper premiums, while insurers may be able to save costs by not having to pay claims. So it's a win-win. On to the last benefits of insurance, invisible earnings. Invisible earnings is an earning from intangible goods such as services. One of the examples of invisible earnings is invisible trading. The term invisible trade refers to economic transactions that involve monetary exchange but not actual goods exchange, such as customer service outsourcing, overseas banking transactions, the medical tourism industry, and insurance. Example of invisible trade is when a business in one country buys insurance coverage from a company in another country. Even though there is no goods exchange, the principle will remain the same, as it still generates income to the country. That is all from me. Thank you. Now I will pass to the next presenter, Ain.
To conclude, each of us is exposed to numerous types of risks that could result in various types of possible losses. Therefore, insurance can assist in reducing the cost and impact of the losses. That's all from us. Thank you very much.